prospective financial information, what will come to you? If I'm a student, what will come to me, ladies and gentlemen, about PFI, prospective financial information, prospective means futuristic. I'm being given a company's forecasts. I'm being given a company's next year's budgets to audit, to review, right? So remember when I taught you this thing, I told you that budgets are quite unrealistic at times. I mean, before coronavirus, we were planning to be having like 2,000 students in 2020. Corona hit. Our number of students in this case here went down to like say 200, right? So there are many things that can really change so that future information may not be as accurate as it was intended. So if I'm given futuristic financial information to give an opinion regarding to whether those figures are correct or not, what should I do? What should I do? And I would want us to look at question number 3A, of which we start with the requirement. We are required here to explain the matters which should be considered by Johnson and Company before accepting the engagement to review and report on Nally's company's PFI, prospective financial information. What is it that I should consider, ladies and gentlemen, before I say yes? As your auditor, I can as well give an opinion as to whether your budgets are okay or not. Even before I read the question, ladies and gentlemen, I'll be able to pick out like 3 or 4 answers right away. For example, I know as regards PFI, if this is an additional job that I'm going to undertake, I must consider my what here, I must consider my competence. Do I have a competent staff within this audit firm of mine who will be able to undertake this PFI review effectively? So competence is number 1. Number 2 is my independence. Remember that now I'm accepting more and more jobs. When I expect more jobs, what do I get when I get more jobs? When I get more jobs, my fees will go up. Is there a possibility of these fees going up such that I'll be able to get more than 15% from one client? Such that 15%, more than 15% of my revenue is coming from one client. If that is the case, then I should reject. Why should I reject? Ladies and gentlemen, remember when most of your fees comes from only one client, there will be too much dependence on that client. So if that client, one fine morning, he tells you to jump, you can't tell this client, no, I'm your auditor. You simply ask this guy, how high do you want me to jump? Because you know that he's the one who is buttering your bread. So independence is very key. And even in the concept of independence, remember, when I'm starting, in this case, ladies and gentlemen, to handle so many documents for my organization, there is a very high risk of what we call self-review. When you start doing an audit work, at times, in this case here, you'll be forced to get figures that you saw in these budgets, at times, for example, being included in your audit. In the financial statements that you are preparing currently, perhaps the directors will pick these budgeted figures and they started discussing those figures in their annual reports. So as an auditor, there is a likelihood that the moment you start, ladies and gentlemen, really handling a lot of information about your client, there is a very high chance that you shall start reviewing some work yourself that you met somewhere here. When looking at the budgetary figures, now you'll be getting them when you're doing the real auditing of the books of accounts. So in that case, then your independence will be compromised. So that's number 1. Number 2, assuming Jensen and the company accept the engagement, they recommend the examination procedures to be performed in respect of Nally company forecast statement of profit or loss. It's PFI that they would want me to examine. And of course, the procedures will be the same. The concept of R, A, E, O, U. R, A, E, O, U. R is the analytical procedures. I'll be able to compute figures, ladies and gentlemen, right? I'll be able to compute ratios and observe the trends in the budgeted figures given. Are those figures in this case here making sense? Are they making sense? So it is the same R, A, E, O, U. Abdul is asking whether we write. No. You remember I'm giving you these answers, right? Abdul, I'm giving you answers here. Here, basically what I would expect us to is to discuss, and then if possible, you guys now should be able to pick answers later, right? And write them. It should be a discussion. If you start writing, you'll not be able to cover so much. We'll be able to cover so much. Or do you want me to give you like points you write down? Is that what is good in the interest of everybody, that we give you points you write down? Marietta, yes. Mutembe, yes. Rosie, yes. So I'm waiting to be guided here. I can see 4. Bila shaka. Martin, yes. Lily, yes. It's then everybody who wants to write these things down. I'm the only one who doesn't want students to write down. So I'm sorry I'll not be able to do that because that means you can only cover one question, which will be very unfortunate. Let me just guide you accordingly. I know you guys are panicking because your exams are here around the corner, but let me guide you accordingly. Right. Now, so we are told here, assuming Jansen's and the company accepts the engagement, recommend the examination procedures to be performed in respect of Nali's forecast. So as I'm planning my answer, I'll remember that these examination procedures are which ones? It is a R, A, E, O, U. Right? So analytical procedures, of course, compute ratios, and see the trends. Are these trends, for example, trends which are expected? Under A, inquiry, I'll be able to do a lot of inquiries regarding these figures. For example, I'll be able to talk to the management. The management, of course, they should be able to commit themselves that it is their responsibility to do budgets. Right? They must give me, in this case here, a letter of representation. Right? So I have to engage, for example, when they're giving me like revenues here, I have to talk to the sales director to see whether these figures really, are they making, or rather, I mean, he has to also tell me, commit himself in writing, that these figures, according to his best of knowledge, that these figures are realistic, they can be achieved. And of course, I would want even the marketing strategy, right? And the inspections, ladies and gentlemen, I will be able to inspect so many documents. So for example, you tell me that your administration expenses are going to be like this, like rent. I should be able to get even receipts of the various rent amounts which are being paid at the moment, and to confirm in this case here, trace them to these figures. Are these figures realistic? If you're telling me that today we are paying rent of 5,000, and then you're telling me from your budget that rent is going to be 22, 4 times, why? You have to explain. If it is this finance cost, ladies and gentlemen, that I'm seeing here, of course, finance cost, there must be loan agreements. I would want to see those interests, and you have to tell me why you think the loan interest is going to decrease in the future, or is going to decrease in the future, right? So we are told, ladies and gentlemen, for us to be able to appreciate that's part B, so we can read part A. We are told you are an audit manager in Johnson & Company, which offers a range of audit and other assurance services to its clients. One of your audit clients is Nali Company, which operates a commercial haulage company. Nali Company has been an audit client for the last, so this is your audit client for the last 5 years, and is currently planning a significant expansion of its operations into a new geographical area and a jurisdiction. In order to finance the planned expansion, Nali Company needs funds to purchase additional heavy goods vehicles, expand its warehousing facilities, and recruit more drivers. The company is also planning a major advertising and marketing campaign targeted at potential customers in the new jurisdiction. Nali Company's finance director, Susan Sedon, has approached you to ask if your firm will provide a report on prospective financial information which has been prepared in support of a loan agreement. The application is for new long-term loan of $22 million from the company's current lender, which it intends to use exclusively to finance the planned expansion. The company currently has an existing long-term loan of 31 million from the same bank, which is redeemable in 5 years' time. Suzanne Seldon has provided you with the following extract from the prospective financial information, which will form part of the company's loan application. So it is only a forecasted statement of profit and loss. So I can see revenues. I can see cost over sales. So ladies and gentlemen, amongst the procedures that I must, if these are P&L, I expect a P&L, of course, to follow the principles of what here? IFRS. If it's revenue, what is the principle of revenue recognition? If it is cost, how are you charging the depreciation into cost of sales? I would want those policies, ladies and gentlemen. So I would want to see as an procedure, as an examination procedure, I would want to see whether IFRS principles have been followed in preparation of the PFI, or they just want to give us things that don't make sense at all here. So is the IFRS being followed? Great. So I'm being told, ladies and gentlemen, here, if you look at this very well, I'm told revenue represents amounts derived from the provision of haulage services to commercial customers operating principally in the retail sector. NALI's company board of directors believes that trade in both its existing and new markets will experience significant growth over the next 2 years. That is an assumption. It's what they believe. So as an auditor who is examining this forecasted profit and loss, I would want to check whether those assumptions are reasonable. Are they reasonable? And for me to do that, an inquiry, of course, will be very, remember, as an auditor, I'm supposed to exercise a lot of professional skepticism. So when they tell me that they expect both markets, in this case here, to grow over the next 2 years, I really put a lot of question marks here. Why? Why? Give me evidence. Do this and this. So number 2, we are told that cost of sales, number 2 here, cost of sales comprises the cost of warehousing and distribution, including relevant staff costs, maintenance and repair of vehicles, and depreciation of property, equipment, and vehicles. Number 3, admin expenses are mainly the cost of running NALI's company central head office facility. 4, finance costs represent the cost of servicing long-term finance from NALI companies, what here? Bankers. So when they tell me that here they will be paying 1450 as interest from the RAEOU, the recalculation, I would want to recalculate this finance cost as an auditor and see whether you see I'll be telling them that, you guys, you have a current loan of 31 million. When you get this facility, you'll be paying 22 million. So in total, that will be 53 million. So out of this 53 million, what is the rate of interest? I should be able to recalculate the finance cost that these guys expect to pay here. So they want me to explain the matters which will be considered by the company, my company, before accepting the engagement to review and report on NALI company's PFI. So I'll not belabor here, straight I'll just give you the answers here. So this is question number 3. Question number 3, ladies and gentlemen. Question number 3. So matters to be considered before acceptance of engagement. Number 1 will be the auditor's independence, including potentially significant advocacy threat and a possible self-review and self-interest threats. Intended use of the report. Is this report going to be used by the bank only, or is it something that will be distributed widely? So basically here, I'm looking at risk mitigation. If it is something that will be used widely outside there, most of these parties outside, if they use this information that I'm going to give an opinion over, and then they get into problems, they'll sue me. So I'd want to know the intended use of the report. Who are the users? And this has to be written down. It has to be put down in writing. Nature of assumptions and the time period covered. This is very important. In this case, we were told 2 years, right? Availability of experienced competent staff, and a time frame for assurance. Do we have experienced and competent staff? At least that I cannot forget. Appropriate safeguards to reduce risks to acceptable level. Now that I'll be doing two things for this one client, is it possible for me, for instance, to have two engagement teams? Have one engagement team for purpose of reviewing this budget, and I have the other engagement team for purpose of auditing. So I have to consider before I accept this job, if possible, to avoid these independent threats, I should rather have two independent teams. So do I have that capacity within the organization that can make me, in this case, to safeguard, to reduce these risks? Risks of what here? The risk of independence, you remember. And then we have here details of the PFI to be given to the bank. Which details? What do you want me to give to the bank? Is it just a forecast profit and loss only? Would you want a balance sheet? Would you want a cash flow? So I would want the scope of operation, ladies and gentlemen, here to be defined very well, So I want to believe you have been able to pick your points, high-level points, of course, as I always call them, in a way that you should be able to give me green light to go to part 2 of this question. Can I go to part 2 now? We can't start writing these things really on the board because this answer is yours. So long as you really appreciate what is there. It's just like any job outside here. Ladies and gentlemen, before you start any job outside here, there are those things that you must look at. Somebody comes and tells you that we have got this tax obligation at KRA, right? So you have to look at your competence, right? Whatever report you want me to produce for you, how is it going to be used? Where else are you going to distribute it? I would want to know that. I would want to know the scope of operation. Thank you very much. So the second thing here that you guys have told me to discuss is this one here. Where they want me to, already have discussed them. Assuming Johnson's and Company accepts the engagement, they want me to recommend the examination procedures to be performed in respect of NALI company statement of profit and loss. Look at here, 9 marks. We expect like 9 good points from this R, A, E, O, U. Is there somebody who is able to state those points very fast? The examination procedures from the R, A, E, O, U in terms of prospective financial information. What key things are you going to do as an auditor? Remember anything that you say here. For example, from the one doing this PFI examination, I would want to know the qualifications of the people who have developed these budgets. I would want to know. That's an examination procedure. I'm inquiring. I would want to know. Who did this work? Is this accountant? Is he fully qualified? If he's not fully qualified, I will not rely. I'll not want even to do the work. Right? That's a procedure. Right? There are a lot of recalculations here to be done, like the finance cost. I'll have to calculate, right? I would want to know how these figures were calculated so that I can recalculate them myself. When you tell me that your cost of sales is comprised this and this, and I'll tell you no problem. Please give me those figures for the base year. For the base year, I would want to do it myself. Yes. So I'm getting the chart, ladies and gentlemen. I would really love to read your work as usual. Like now, Abdul, you can't say analytical procedures. No, you can't get even a single mark. Analytical procedures, so what? You need to tell us what they are. It's about computing ratios. It's about, in this case, checking the figures. How are they increasing, for example? Is that in line with the market expectations? Piomon tells me, obtain duty management representation on the reasonableness of the assumptions used. I love that. And inquire from management about the depreciation policy and the many other policies. Yeah, they have to tell me in writing. Anything that you say here will be correct. So long as you try to explain it, Abdul. So long as you try to explain it, remember, there's supposed to be 9 points. There's supposed to be 9 points. If you give us 3, we'll only give you 3 marks. I like the concept of assumptions because remember, Yeah, I like this one. Inspect physically documents relevant to the maybe PFI preparation, the documents, and you should be able to quote them. For example, for PFI, ladies and gentlemen, I expect this company to have, or rather, to have quotations because it's futuristic. They must go and ask people there that you guys, if you're going to supply us these goods in the future, how much will you charge us? I expect to see quotations, and if those things are there, I have to inspect physically the documents relevant to the to preparation of the budgets, for example, preparation of the PFI. Anything you tell me, ladies and gentlemen, will be correct. Trust you me. Okay, so in the interest of time, ladies and gentlemen, I would want to share these, and then we discuss the answers now in a way that we shall never forget. Let's discuss the answers. Let's discuss the answers. Like now you can see here, check arithmetical accuracy of the forecasts. Arithmetical accuracy. You're doing what we call casting. For example, down there, they have given us, if it's revenue minus cost of sales, they've given us gross profit. And those gross profits, in this case here, in agreement, it's called casting. Agree accounting policies consistent with financial statements and comply with IFRS. So see to whether this basically is inspection. We're inspecting the policies given. Are they consistent with those ones that are used in preparation of the financial statements? And of course, do they comply with IFRS? Discuss key assumptions with management and assess reasonableness. Review market research documentation and discuss with management. Obtain and review customer contracts for new customers to confirm projected growth in revenue. So basically, you're inspecting the customer contracts here. Do we have any new contracts? You guys are telling us that the market will be very good, and you don't have any new contracts on the table. What kind of liars are you people, right? Obtain written representation from management on reasonableness and the completeness of assumptions. So this is very important. Next, assess competence and experience of client staff. I told you who prepared these forecasts, including this PFI. So I would want to know whether those guys are qualified. Are they CPAs? Right? Perform analytical review of key trends like growth in revenue, cost of sales as a percentage of revenue, declining trend in administration cost, increase in net profit margin. I have to compute those ratios and see really what kind of trends are we having there. Review capital expenditure forecasts and agree them to invoices. So the invoice, of course, may not be there. This will not be there for PFI. You don't have it. Not unless you're looking at the invoice, previous invoices. But basically, we'll be having what we call supplier water quotations. These guys are budgeting to buy 10 vehicles next year. So they'll go to, for example, CMC and ask CMC next year, we want this number of vehicles. These are the specifications. How much will you charge us? So when I call these directors and tell them, you guys, I can see you are putting a lot of cost here for vehicles. They'll tell me, hey, you know what? This is not something that we are thinking. It is in existence. We have quotations here from CMC, right? Recalculate depreciation and ensure correct inclusion of depreciation on new, whatever, and warehousing facilities. Obtain and review breakdown of operating expenses that, of course, you can't remember very easily. Inspect, yes, this is very important. Inspect utility bills and assess reasonableness of forecast utility overheads. So the utility bills, like for example, electricity bills, if they are here, I would want to know you guys are projecting these things to be 10 million, but today they are 2 million, right? So I would want to inspect the current or recent utility bills and assess reasonableness of now forecast utility overheads. Obtain and review documentation for existing loan agreements with the bank and draft documentation for new loan and recalculate the finance cost Ladies and gentlemen, I would want you again, please allow me to disturb you a little bit. Amongst those points that we have spoken there about or examination procedures of PFI, which ones will you never forget? Which ones will be in your mind? Somebody give me two points which you can never forget about not audit, but examination procedures. of PFI. The ones that you can't forget now. Now we are coming to the end of this revision really. And they're similar to the audit procedures. They're similar to the audit procedures basically. So long as you remember the concept of RAEO, and then out of that you should be able to, mention so many things. Are we together, or they're still typing? I hope they're doing something. I hope they're doing something. Thank you very much, Maria. Performing analytical reviews of key market trends. Here, Marietta, remember here, when you mention such good language, that's very good English. You must remember, if it's key market trends, talk of revenue growth, talk of such things, right? What is happening in the market, competitive industry. Yes, e.g., I'll calculate the revenue growth year per year, right? E.g., so you don't end up writing naked figures. You want figures with meat. You want sentences with meat. After you put a full stop, you need to qualify, right? Thank you so much, Marietta. Yeah, Rosie, perform analytical review of key. Yes. Review. You see, like now, this is a very good student who has even gone out of the box to give us a very good point. Review board minutes and review competence of the preparers. The only thing I have done here, first of all, Rebecca, I appreciate this point, but what I've not liked in your point is that you are mixing up very important concepts here, which the examiner can only give you a mark. Review of board minutes for approval. Was this procedure of budget preparation and even the budget that has been given to me, has it been approved by the board? It's quite a heavy point, which should be alone, Rebecca. And then the concept of now inquiring about what your competence of the preparers. You must separate. Those are two important points that should be able to make you pass. Right? These guys are not talking to me. But Abdul, I've got a problem with you. Abdul, when I meet you physically, I'll punish you somehow. Good points, but you are writing like check arithmetic accuracy. This one, the examiner can't give you a full mark. Check arithmetical accuracy. So for instance, what I'll do, I'll come and after full stop, I'll say, I'll cast. I look at one of the figures that is in the question here. I look at one of the figures that is in the question here. So in the question here, like now here, that I'll go for 2018 and see whether this profit before tax of 9613 is correct. Is it arithmetically, is it correct? So I use my calculator myself. So I'll cast the figures. I love that. Okay, great. Thank you very much. You're overcoming. There are points you guys haven't given me, but I believe you shall be able to give me. So are we in agreement that now I can go to the next question, or you still want me to write for you the answers on the board? Is there somebody who is still saying that Molim write for us these answers on the board? So long as, ladies and gentlemen, we have the answers here and we're discussing here between ourselves, I don't think this thing of writing answers on the board is really a good thing. No, we're not be able to like now we're moving very fast because we are discussing something. You're discussing documents here. Serious discussion. We are good. Thank you very much. We continue. So we are told part this required. Comment on the quality of the planning and the performing of the audit of Watson Company, discussing the quality control and the other professional issues raised. How many marks? 10 marks. So if I can even have, like, say, 5 points, very well explained, I'll be able to get 10 marks. Great. So we continue here. Yeah, sharing the answers later is the best thing, really. So, ladies and gentlemen, remember when they are talking of really planning for the audit, when they talk of planning for the audit, there are things that I'm supposed to really appreciate. When they talk of planning an audit, what am I supposed to do really? First of all, I must understand my client very well. So I must have what we call an entry meeting with my client. In this entry meeting, I would expect them to give me the financial statements, 5 of them. I would expect them to give me an income statement. I would expect them to give me a statement of financial position. I would expect them to give me a statement of changes in equity. I would expect a cash flow statement. I would expect the notes to the accounts. So I'm trying to plan here. So when I'm planning, I'll be able to assess risks. What kind of risks here? Remember, I could be the first auditor, for example. Or I could be a new auditor here. You know, a new auditor has to do so many things. If it's a new auditor, I have to really go an extra mile to confirm so many things. So which audit strategy am I going to use here? Right? Should it be the transactional cycle-based? I'm trying to wonder loudly. Balance sheet, audit strategy, where I just audit the balance sheet items. Is it risk-based? But the most important thing, ladies and gentlemen, during the planning stage is to understand my client. Who am I dealing with? Are the accountants, for example, qualified? How are the internal controls like? Ladies and gentlemen, in this case, I would want to know the high-risk areas. High-risk areas. For example, if these people have what we call financial instruments, of course, they're accounted for under IFRS 9. We know that financial instruments are quite technical things to account for. They are quite technical things, the hedging tools. They are quite technical things even to audit. So it is at this particular juncture, I'll be able to get a high-level agenda, a high-level understanding of the various risks, which then will be able to guide how I'm going to conduct the audit. So ladies and gentlemen, please listen, or rather, let's just read the question first. Let me share my screen here. Part B. One of your colleagues at Johnson and Company, Rodson Evans, has been taken ill at short notice, and you have been temporarily assigned as an audit manager of Watson Company, an IT consultancy company, which is listed on a second tier. So the company is listed, that takes my risks very high. Because I know as an auditor, any company which is listed, whatever opinion I give will be out there in the public. I have to do thorough work here. There is no joke here. The company is listed on a second tier investment market. The final audit of Watson Company for the year ended 30th June 08 is approaching completion, and you are in the process of reviewing the audit working papers. The draft statements for the year recognize a profit before tax of 54.2 million and total assets of 23.1 million. When you see these figures being floated to you, hey, you, my good students, what comes to your mind? When you see the profit before tax, you're seeing total assets, what comes before your eyes right away? Can someone talk to me? Materiality, I suppose that is what you have written here under the charts. Materiality, yes. Thank you so much. The audit supervisor, who is part qualified CPA for your case, has sent you an email from which the following extract is taken. When they tell you that this guy is a part qualified, what is your take on the competence of this person? What is your take on the competence of this person as regards auditing is concerned? When they tell you that somebody is part qualified. But you don't want to talk to me. When they tell you that somebody is partly qualified, he is incompetent. Don't rely on his work. He is incompetent. This guy is incompetent. questionable competence. Thank you very much, Piomondi. Piomondi will make a very good auditor. Competence is questionable straight away. Questionable competence, yes. Thanks, Kelvin, yes. Thanks, Kelvin, yes. Great. No, I wanted to not to stop sharing. Great. So, and gentlemen, you are told here that it is great to have you on board. As I was beginning to worry that there would be no manager review our working papers prior to the final audit clearance meeting next week. Wow. Wow. So you're coming in like this. These guys are at the tail end. They are telling you that it is next week that they are going to have this final audit clearance. There is a problem there in terms of what are resources here. I mean, do we have that capacity then to be able to review everything? I'm quite new to this engagement. I'm new in this engagement. The audit assistants and myself have done our best to complete all of the audit work, but we only saw Rodney on the first day of the audit about a month ago, when I think he was already feeling unwell. You can imagine how they have been working themselves without really supervision. Who has been taking their working papers? Because working papers somewhere that they must be signed, reviewed by, right? So basically they have been like a ship without a radar, right? Right. We had a short, brief meeting with him, at which he told us, if in doubt, follow last year's working papers. I mean, what is that? Last year's working papers are supposed to be just a benchmark. In the current year, so many things are going to change. One issue which I wanted to check with you is that Watson Company has introduced a cash-settled share-based payment scheme by granting its directors share appreciation rights for the first time this year. Who can talk to me? This cash-settled share-based payment scheme is normally accounted under which IFRS? This is IFRS what? Share-based payment is IFRS number what? Is IFRS number what? Is IFRS number what? If you don't know, you simply say, I don't know. Nobody is going to fight you if you don't know. Simply say, I don't know. This is IFRS 2, isn't it? This is IFRS 2, and I know that IFRS 2 is among those auditing or other accounting standards. Yes, IFRS 2, yes. It's among those standards which are quite complex, difficult to use. So to me, then this IFRS 2 cash-based payment is a risky area as an auditor. So we want to know how has this been audited. Number one, how was the figure that is here? And a share-based payment, maybe 10 million, how was it computed? Who computed this figure? Is this person really qualified? A member of ISPAC, say, with 10 years experience, right? And even the auditor himself, this guy is partly qualified. He's not really up to the task, right? So we are told here, this was not identified at planning. This is quite a wrong thing. There are those things when I see, like I know IFRS 15, revenue recognition. I know IFRS 9. IFRS 9 I know is a bad one. I know in this case here, IFRS 2 is a risky area. I know inventory valuation, IAS 2 is a risky area. If there is anything to do with the group, IFRS 3, IFRS 10, IFRS 11 and 12, anything to do with the group, including the associates, those are risky areas. Whatever figures are in the financial statements, they have to be identified from the beginning, and more work, audit work has to be done in them. The share appreciation rights were granted on 1st July 2017, at which date the client obtained evaluation of the rights, which was performed by an external firm of valuers. Very good, external valuers. I've filed a copy of the evaluation report, and I've looked up the valuers online, and I've found a very professional looking website which confirms that they know what they are doing. Really? Is that how you do due diligence? That you go and get in? Actually, if I go to a website and get a very good looking website, I know that is how bad people hide their things, right? This is not how you do due diligence on these external resources you're having. You'd want to know, are they competent? Are they independent from this? You don't go to their websites only and then you tell us that you believe by just seeing their website that they are good people. I mean, this is quite bad. No wonder you are not fully qualified. You never give me this kind of an email. You. The cost of the share appreciation rights scheme based on this valuation is being appropriately recognized over the 3-year vesting period, and a straight line expense of $195,000 has been recognized in the statement of profit or loss on this basis, okay? A corresponding equity reserve has also been recognized on the statement of financial position. You don't recognize this as equity. No. This will only become an equity element when this period that they were promised lapses. When they vest, when they become shareholders is when we shall be able. For now, we can only recognize that we owe them. It's supposed to be recognized as a liability. A corresponding equity reserve has also been correctly recognized on the statement of you are lying, you're cheating. The amount also seems immaterial, and I can't see any need to propose any amendments to the financial statements in relation to either the amounts recognized or the disclosures made in the notes to the financial statements. Can somebody try to compute the materiality of this? 195,000 to the total assets. Take this to the total assets. What is 195,000 divided by 23.1 million? Can somebody give me that figure? 195,000 divided by 23.1 million. 195,000 divided by 23.1 million gives me what figure? Times 100, of course. Times 100, of course. What are we getting? Somebody continue being nice. Today, you guys are so nice to me. Continue being nice as usual. Please give me that figure. I want to check materiality. Please give me that figure. Please give me that figure. 0.85%. 0.8%. Very small. Very small percentage. Very small percentage. So immaterial to total assets, and of course immaterial. Now these are different paper that I got, not a mock paper. It's a different paper. I'm sending you the material, the paper, write down the answer. So it's very immaterial, but now, ladies and gentlemen, completely immaterial. I love that. But now remember, let me stand a little bit now. Let me stand a little bit because now you're making these things to be very, lively now. Great. So we are saying fine. It is what here? It is immaterial. You are saying fine that this thing is what here? It is immaterial. Fine. I agree. It is immaterial. Fine. I agree. But ladies and gentlemen, remember that you have got what we call related party transactions. These shares are being given to who? Directors of the companies. Directors and the key management of a company are related to the company. And anything that you give them, even if it's a shilling, even if it is 0.0008%, it is regarded as what? Material. Anything that you give to related parties is always what here? Material, and has to be accounted for correctly and disclosed under a note called what here? Related party transactions in the books of accounts. It has to be disclosed. So regardless of the percentage, anything that goes to related parties, don't even compute its materiality. It's always what here? It's always material. It's always material. Are we together regarding that? Are we together? So Abdul, we can't say here that it is completely immaterial. Abdul, you can't say that here because these shares are going to a related party transaction. It's a related party transaction. So it has to be disclosed. And automatically, if there is an error, that error has to be corrected. Anything to do with related party transactions, it doesn't matter how small the error is. That one has to be corrected. There is no discussion about that. Because we don't want these guys here to enter into what we call creative accounting. They're trying, in this case, here to hide their own mistakes, right, under them. You know, they have paid themselves. Who tells you that it's only 195,000 which is due to them? These guys will be hiding something. So tell them, correct. We don't want a joke. As an auditor, if it is anything to go to you, first of all, disclose. And if there is an error, if it is an error of 1 shilling, correct it. That's how they'll be able to know that you are what here? You are serious here. You are serious here. Maybe Mutembei has a problem with his internet, right? Because here what we are saying, ladies and gentlemen, is that these shares belongs to who? These shares here. One issue which I wanted to check with you is that Watson Company has introduced a cash settled share-based payment scheme by granting its directors, check this, its directors have been granted. So even if this 195,000 amount is what is immaterial, so long as the payment is going to a related party. Do you guys remember the definition of a related party? We'll talk about that later, but management, key staff, directors of a company are always what are related party. They're related parties. And any related party transaction you must always disclose, regardless of the materiality level. You must disclose. And if there are any errors that arises out of a related party transaction, you must always do what here? You must always correct. Not you as an auditor, you must stamp down your feet as an auditor and tell those guys here to do what here to correct. I hope now you understand that, Mutembei. So they want me to comment on the quality. No, before that, the amount also seems immaterial and I can't see any need to propose any amendments to the financial statements in relation to either the amounts recognized or the disclosures made in the notes of the financial statements. So you're required to comment on the quality of the planning and the performance of the audit of Watson Company, discussing the quality control and other professional issues done what here raised. I think you have done most of this. So then what we need to do is to come here. Okay, is to come here and read the answer now. Generally up to 1 mark for each issue discussed. For each issue discussed. So from what we are able to see from the case question given, there is inadequate planning, stroke consultation with the client regarding the share-based payment scheme. Inadequate consultation, right? Complex judgmental area should have been identified as a high risk from the word go. A part qualified supervisor, that means inadequate skills and expertise for this listed client. The client is listed. You need to give this client here, employees who are what here, the auditing the team must be very qualified. All right. Yep. Thanks for reminding me. Right. Now, ladies and gentlemen, we are told here, treatment of share-based payment is incorrect. Valuation should have been updated at year end for cash-based scheme. Recognition as equity reserve is also incorrect. IFRS 2 requires recognition as a liability for cash-based scheme. Share-based payment is immaterial quantitatively, right? But scheme is with directors, is with, I don't know what this RPT stands, but is with directors, which is material by nature, especially for listed entity. the scheme is for these directors, ladies and gentlemen. With respect to these directors, ladies and gentlemen, and that one does not matter. Even if it's a shilling that you gave to them, it becomes material. So the error should have been calculated and adjusted, adjustment requested. The matter should have been included in the related party disclosures notes in accordance with IAS 24. Inadequate staffing levels, a company really that is listed, you go to audit it, and then you go as a 2-member team and an audit manager, right? This is quite, ladies and gentlemen, quite a small number. So only 2-member and audit manager should have been replaced earlier. So even if they were to replace earlier, still this is inadequate, really. Inadequate briefing meeting, poor quality advice to follow last year's working papers should always be on lookout for any new situations and issues. Insufficient monitoring and supervision by the audit manager. This guy was sick. No evidence of partner oversight during course of audit work, right? So the partner, there is no place they have told us here that the partner was really offering any oversight. You know, even when the manager, for example, became sick, at least the partner should have been able to come and wear his shoes before getting a replacement. They have not mentioned anywhere about the partner, the engagement partner in this question. Failure to update and change the audit plan as necessary during course of audit, clearance meeting is next week, and the manager review is only just taking place. Where was honestly the partner here? If this guy was sick, the partner should have come in handy. Lack of audit evidence for this external valuer in terms of competence. You don't tell us about the website alone. In terms of capabilities, objectivity, scope of work, right? Reference to website is inadequate and reflects inexperience and lack of expertise of supervisor, like that. So I want to believe, ladies and gentlemen, again, that you guys have been able to pick a few things from these discussions on audit planning, where in this case, they never scored well. When they never scored well, I hope that is helpful. I can see a chart here. Yeah, related party transaction. So related party transaction, ladies and gentlemen, related party transaction, perhaps you haven't done this. What I need to do, ladies and gentlemen, then is to pull some materials. We study about this IS 24. Can I pull some materials? I can see so many questions surrounding this IS 24 related party transactions. Can I get some materials? I first of all take you through the related party transactions. What do you think? Related party transaction before we continue? Yes, just a minute then. Just a minute.